I don't see the economy having quite the buoyancy, except if we go into this sort of new, I don't know, Web 3.0 scenario where you're turning once again to the growth in this AI, which I think is just phenomenal, like just phenomenal. And for anybody who's like, oh, I don't buy it, like I think AI is going to be incredible. And I've told you this story many times, Rob. I've told the viewers, I went to the Apple store and I tried on the Apple Vision Pro goggles and wow, like I'm just like, this is just the beginning. Like everything's going to change. It's going to be incredible how we communicate with each other, but how everything's done. Someone had mentioned to me actually at the Apple store, the guy, I've done this twice now. Like I keep going back. Maybe I'll go back again this weekend and talk to somebody else about it and try it out again. There's not a lot of applications for it right now, so it's not like something you would buy, but it's so interesting to see. And if viewers are watching, I encourage you to do that because it's just so cool and it gives you some insight into all that can be. And he was saying like, look, you could actually operate, believe it or not, on people. He was thinking about the medical applications because he had a medical background. I mean, I'm thinking about the television implications, meaning streaming applications, meaning, hey guys, you know what? You can be like right here in the studio with me. This is like teleporting a la Star Trek or something. It's just incredible. So I see it from a media perspective. I see it from like a sports perspective. You can be like in the game almost with the players. And some people see it from just all these other perspectives. But it's incredible. I mean, and it's just starting. So when I look at the economy faltering, I think I take a little bit of solace in the fact that there's a lot coming our way that we don't even understand or fully know or grasp just yet.
Yep, and every industry will be affected and will participate, and a lot of companies across industries will benefit. And we're definitely looking out for the ones in all these different industries that are really going to benefit. It's fascinating to think about AI in the context of the last few years, because it's really unrelated to like what's going on with the political environment or the macro, right? You had this AI technology, what Jensen Huang did at NVIDIA and kind of to grow that business and develop these GPUs, that really had nothing to do with like who was in the White House or not, right? So you had this kind of AI wave and boom, and that's just separate from what's going on in Ukraine or the society, right?
The border or the economy in general. Mm-hmm.
Yeah. So
it's like innovation just keeps happening.
But it's really been an important driver of our economy. So the strength that we are experiencing in the economy is really, to a very large extent, like
are those productivity gains?
What's that?
Are you talking about productivity gains?
No, it's not even. I don't know that the productivity gains have even arrived yet, because what they're doing now is they're really building out like the capacity. But I think I'm thinking more just in terms of like the wealth creation from the AI stocks or the hyperscalers, NVIDIA, the capital that they're putting to work to build out the AI processing capability that eventually will have these applications. And I think the market's wrestling with, well, what are the applications? When will we see them? How much money will they make? Are they going to be really, all they're cracked up to be? Those are fair questions.
Some people say, oh my gosh, the market, can we really support these valuations? I guess it's to some extent anyone's guess, but I'm just going to give you the Trish Regan 6 cents, which has historically been amazingly quite right. Like in 2000, I'm like, this is ridiculous. This is absolutely ridiculous. Like sneakers.com, like this is, what are these .coms? Like this is totally ridiculous. I had no faith in that. And I was right. Like it was a complete total bubble. In 2008, I was so frightened. I was frightened in 2006 for 2008. I might have been frightened in 2005 for 2008. I was like, this is not good. This is not good. This is not good. The no income, no asset loans that we were giving out, and this idea that we were diversifying risk by everybody having a share of these things. I'm like, this could go really, really badly. So I nailed that one. And then, when the Bitcoin as well, I was like, this is amazing. I loved it at $10. I look at what's going on right now. I'm excited in a way that I don't think I've ever now look, I could be, maybe it's all baked in. I mean, that's what the bears would say, right? They'd say it's totally baked in and the market can't sustain these levels. And I sort of would come back and say, I don't think we've totally understood what this economy and this innovation is capable of. And that's what excites me.
Yeah, once we really start deriving the benefits of these technologies. So I think where the risk is, like you look at the Mag 7, and that's like a third of the S&P 500 by market cap.
Mm-hmm.
And what the Mag 7 really consists of now, it's NVIDIA, which is making the GPUs, and then it's the other six companies, more or less, that are buying the GPUs and building out the data center capacity. And that's what's driving those stocks as well, right? So this that they're going to be able to buy the GPUs and then, kind of in one way or another monetize that capacity that from the processing capacity that they're investing in. But then there's the rest of the economy, which will be like kind of downstream from that, and sort of the customers of these hyperscalers who are themselves the customers of NVIDIA. And once you start really deploying AI technologies across the economy, that's where I think we could see very significant productivity improvements and new market opportunities and use cases. So, there's a distinction to be made between, the companies at the very, very top of the food chain when it comes to this AI revolution, and then other companies that aren't, quite as getting as much valuation uplift from this trend.
It's tricky though. Like, you think about it. Google was once the upstart compared to Ask Jeeves. I don't know if you remember Ask Jeeves. We'll see how old the audience is, if anybody remembers Ask Jeeves. But I remember Ask Jeeves, and this is around, 2000. There's winners and losers in anything. And it's sometimes sort of obviously hard to know, right? Hindsight's 2020. But you think about the AOL Time Warner deal. There's just a lot of times that we've been really excited about the future and what's coming, and for good reason, right? That was a major shift, and moving to this internet economy certainly was a big, big deal. And then the onset of the iPhone, and but this is, to me, I mean, I don't need to belabor this, but I'm sort of like, wow, This is a whole other level. I mean, it's incredible.
If we go back in time and look at those other two periods of market crashes, like the late 90s and the tech crash, and then the financial crisis, there were elements of fraud and deception and total, BS, for lack of a better word.
Remember Henry Blodgett? Lipstick on his pig kind of thing. He now runs Business Insider, by the way.
I started my career at that time, and had a front row seat actually when I was at Credit Suisse, and really kind of witnessed it. And
was Mary Meeker? No, she was Morgan Stanley. Forgive me.
Yeah. I was working on the telecom team, and I guess I would just say, in retrospect, we all know, going back to the late 90s, these were ridiculous business models. Not all of them, but there was so much hype. None of it made sense. The numbers didn't add up. The valuations were ridiculous. So, there was an element of fraud in that. And there was an element of kind of venture capital taking advantage of retail investors through the IPO market. So that all blew up. And then again, in the housing crisis, there was another element of Wall Street fraud.
Taking advantage, right? Again, of people who could not, subprime mortgages. It shouldn't have been, I hate to say this, and, people freak out, but not everybody should buy a home. And by the way, it's not always in everybody's interest to buy a home. They for some reason, Barney Frank and the rest of them were like, no, we need everybody to buy a home. And, and they're doing it again, by the way, total aside, out in California, they're trying to say, okay, we're going to have home loans for migrants. So you're not even here in the country legally, but somehow we're going to give you a mortgage. I'm like, no, we've seen this movie before, guys.
Or even with the 25 grand for first-time home buyers. A big part of the financial crisis was lending. The banks were lending money to people who had no business having money lent to them. And they didn't have the assets or the income to support it, but they were doing it because there was this fraud going on where they were able to sell the mortgages to these, these collateralized debt obligations and these funds. And everything was levered up 30-1. And that's why we had that crisis. It was a completely avoidable catastrophe. None of it had to happen. So, in those two major stock market catastrophes, there was really this kind of element of deception and fraud and kind of financial tomfoolery, right? But I think now, you could say that with NVIDIA and these hyperscalers, maybe there's a degree of hype around AI,
Hmm.
but it's real money. It's the industry juggernauts putting the money
I
to
mean, real
work.
money. No, you're right. I mean, think about, like, say what you want about Mark Zuckerberg. I mean, he's not a dumb guy, and he clearly is very, very, very focused on this. In fact, he's been challenged, at least maybe we're going back about a year and a half or even 2 years ago, but there was concern, right? That he was so focused on that was totally where he was, burning money because he wanted to be first to the table because the opportunity, right, is so great. And the same thing, you look at Elon Musk, brilliant guy, devoting so much in terms of resources to AI for Tesla, for example. I mean, right across the board, right? You've got really, really smart people that are like, this is where we see it going, and they're putting assets there. So it's, money where your mouth is, as opposed to sort of the shenanigans that you're referring to in sort of other moments.
Yeah, and they're building out the AI infrastructure really for the rest of us. So they're putting the capital to work, and if they're over investing, then I mean, to some extent, there's that comparison to like the fiber build out from 25 years ago. That capacity is sort of the economy's asset, and the rest of the economy. Maybe these aren't going to be the best investments for the hyperscalers, but we'll be able to kind of take advantage of that